Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal, and today we'll be talking about concentration in your financial portfolio. Now, you must have heard a lot about diversification, and when anyone explains about diversification, they talk about the side effects of having a concentrated portfolio. So today, we are going to deep dive into what exactly is concentration in your portfolio and even across asset classes. And also, we will be answering your portfolio queries. So just in case you want to send across your questions, you can do that on our WhatsApp number, which is 865-797-4571. And you can also send across your email, your questions via email, which is themoneyshow@etnow.tv. So a great lineup of content coming up, everything related to your financial portfolio. But let's begin with the headlines of the hour first. Nifty advances for third session led by HDFC Life and BEL. Broader markets also in the green. Infosys beats estimates with profit rising 4.6% sequentially to 6,806 crore rupees. Revenue guidance raised to 4.55%. Short seller that targeted Adani Group Hindenburg shuts shop. We decode why the financial assassins finally surrendered. Saif Ali Khan undergoes surgery after being stabbed at his Mumbai home. Cops say the intruder has been identified. CM Fadnavis says Mumbai is still the safest mega city in India. Hamas and Israel reach ceasefire and hostage release deal, but Netanyahu now says the cabinet meet on the deal is delayed, accuses Hamas of leaning on agreement. All right, so let's decode concentration risk in your portfolio today. And I have with me Prasad Sawant, Advisory Head, Partner, Vertical, IIFL Securities. Prasad, hi, good evening and welcome to the show. So before we talk about concentration risk, what exactly do we mean by concentration in your portfolio? And not only in terms of having the similar kind of stocks in your portfolio, but also across asset classes, you know, concentration from an AMC's point of view, and even the concentration aspect that a fund manager tries to handle when designing a portfolio. So what does concentration in all these aspects really mean, Prasad?
Hi, good evening, everyone. Thank you, Kavita ji. So we discussed more about asset allocation, diversification, etc. But why it is important? Because concentration in one particular asset class or concentration in one particular, say AMC, if you're doing mutual fund investments, is very risky. Because when you talk about concentration, it's all about you putting all your eggs in one basket. So we know that this kind of risk is always there. Where whenever you are planning your investments, it has to be diversified across all asset classes, across all, even in those asset classes, we have multiple sub asset classes. So if I talk about mutual funds, then we have different instruments like equity mutual funds, then debt instruments, debt mutual funds, etc. So that's the reason concentration should not be there in one particular asset class or one particular sub asset class.
See, a lot of times, Prasad, what happens is an investor has for example, let's take small caps, okay? People love small caps these days because the kind of returns they've been seeing in these kind of funds. They have two small cap funds. Then they have one flexi cap and multi cap. So you're talking about a mid cap, a market category exposure. They are over diversified over there. You know, the concentration risk is too much in the portfolio. What will happen in this scenario, considering an investor is maybe very young, mid-20s or early 30s? Is it fine if they have a very strong concentration just in a small cap category via two small cap funds? They also get small cap exposure in a flexi cap. They also get a small cap exposure in a multi cap fund. So, and similarly, you know, if an investor is maybe 50 years old, would you not recommend them to have that kind of an exposure?
That you have pointed out regarding this age and all, because unless and until you are aware what's your risk profile, you should not go with any sort of investments. So as far as the age is the investor is very young, he can go with small cap mutual funds, but again in that he needs to see how much amount he is allocated and in what way and at what time, because in mutual funds you have two investments, like one is in form of lump sum and one is in form of SIP. So when you're investing through SIP, and if it is for long term, say more than 5 years, 10 years, then there is no issue. You can then there is no issue like how much you are going to allocate to those funds over a period of time. But in case you are going for lump sum, then you need to see like you have to go with small cap funds for say 60 to 70%, and balance has to be there in flexi cap or say any active strategy in which the fund manager is going to strategize the allocation across all market caps. Basically, contrarian for a fund is also good when you are looking for investments in such market. Like last 6 months, we have seen a lot of volatility in the market. So in these kind of markets, you need to have proper allocation across all types of funds as per your age and risk profile.
All right. What are the disadvantages of having an AMC concentration in your portfolio?
That is really not suggested, because if you are seeing most of the well-known AMCs, they follow the same strategy across most of the schemes. So we have seen overlapping of stocks, almost 30 to 40% of overlapping of stocks in their schemes like large cap, then multi cap, then ELSS, then even flexi cap. So all these schemes, like if you're investing into one particular AMC, the CIO strategy is same, and we almost 30 to 40% stocks are getting overlapped. It means that you're going to get similar returns across all the schemes over the period of 5 years. So I think FlexiCap is one of the strategy which you can follow, but at the same time, you need to see which AMC and how much time you're going to invest into that particular scheme.
All right. One last question to you, Prasad. Concentration risk leads to what kind of disadvantages? You happen to mention a bit of it in your earlier answers, but then when we talk about thematic funds and we talk about sector specific funds, there is a very strict concentration in a particular sector in a particular theme. What points should you be keeping in mind when designing a portfolio, because these sectors and these themes would also reflect in a large cap fund maybe, or in a multi cap, or in a flexi cap, or based on what strategy the fund manager has adopted for the fund. So how do we take care of this kind of concentration when designing a portfolio?
See, when you're investing into any sector, then it means that you're going for the like investment for longer period of time, because every theme or sector will have a cycle in which like you will get like that cycle runs for minimum of 3 to 5 years. So whenever you're investing into such kind of sectoral funds, we need to see that how much allocation you're doing, and if the concentration is high in those particular sectors, then the chances of waiting for that those waiting for the returns required, or say uh, the aspired returns would might go a bit high, or say a bit longer. So that's the reason whenever you are investing into any sort of sectoral fund, the concentration risk will be there. And in some cases, like if the investor has invested into the same AMC's sectoral theme as well as the large cap scheme, then at that point of time, the investor's capital, even the capital is at stake over a long run.
Sure. All right, that's very well explained. Thank you so much, Prasad, for taking time out and helping our viewers understand the concentration risk in the portfolio that they might have. Thank you so much.